The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 9th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific. I do mean terrific. This is Terrific Workshop Tuesday. Yeah, hopefully you're signed up for my workshop this evening at 5 o'clock. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 75 points, 26,411 is the print. S&P is down 5 at 2878. NASDAQ 100 up 5 points. Russell's off 6. Semis are down 3. Trannies are off 1.25%. That's 143 points to the downside. Trade out at 77.27. Spot volatility index is up at 1644. Gold's up $3. Silver up 7 pennies. Light sweet crude up 49 cents. Leading the charge, the upside dollar-wise, it is Tesla. 262.61 is what it's trading up, trading at. That's a nearly 5%. The upside, Pyxis International, PYX is a ticker symbol, up 22% or 8%. Loxo Oncology up 6. Pioneer Natural Resources up 5. Papa John's up 4. To the downside, it is Sherwin-Williams painting the town red, $13.98. That's 3% to the downside. Black Bod Inc. off $13 or 14%. PPG Industries, that's trading down $11. So we do have things to look at. Of course, I want to look at what you want to look at. So let's go take a look at what was the first request here from Scott S. Scott S. writes in, can you please go over your charts regarding the markets moving up with interest rates? My friend says there is no way in Hell, Michigan, because that is a location. I don't know if you've ever been there. It's one hell of a time in Hell, Michigan. But there's no way in Hell, Michigan, the market will go up with rising interest rates. Help him, please. Well, I don't know if your friend is listening. So, but here's what we know. I just simply take a look at the charts. We take a look at the patterns. That way you and I don't have to listen to the, hey, I've never used this term out here, but how about the fake news? Yeah, because I don't know what some are looking at. I just know what you and I are looking at. And, Scott, one of the things we looked at here yesterday was we just went back to a time that was similar to where we're at now. What do I mean similar? Back in 2004, we had a repatriation. What did we have last year, this year? A repatriation. Only this one's much, much bigger. What did we have before? We had the Fed raising interest rates 17 times in a row. We went from 1% to 5.25%. We started a little bit lower this time around. And we've had a bunch of rate increases. And this is a chart for the S&P 500. And I will tell you, I will share with you, that in that time period, that 2-year time period, the S&P 500 was up 12%. Yeah, 12%. So and here's all the interest rate increases during that time period. So anyone that is out there suggesting that the markets are going to have a tough time moving higher because interest rates are moving higher, they're just full of it. They are just not looking at any chart pattern that exists to be able to go say otherwise. It's just the case. How about we fast forward to today? And let's do that here, Scott, by just simply looking at this chart. Now, this is a quarterly time frame chart, so this way we get rid of all of the noise. Now, what we know is that the Fed began raising interest rates right here where this red arrow is in July 2000. Well, was it July? It was, yeah, July 2016 is when the Fed began. I think it was, let me go back here. Let me make sure. I don't want to give bad data. Where is it? When I think I have the first date out here. It might have been 2015, but yeah, December 17, 2015. So 2016, we're going to say is okay. Let's go back to this chart out here. So we know that interest rates have been on the rise. There's just no question about it. And if we take a look at now, in this case here, I'm looking at the 30-year rate. I should have had on the at least the 10-year rate of the Fed funds rate out there instead of this. Well, we can just do this on the fly. TNX. So let's go take a look at the 10-year. And the 10-year here, we're still in July 2016. And take a look at how rates have just simply moved, zoomed to the upside. Now, on the left-hand panel right here, again, we're looking at quarterly time frame just to get rid of the noise. Take a look at July 2016 in the Dow, okay? When you were down at about 17,800. We're at 400 about right now. So you tell me, what do the chart patterns here tell you? Can the markets rise, the Dow, the S&P? We were just looking at the S&P before. This is the Dow that we're looking at. Can they go higher with interest rates going higher? It is nothing but a bunch of just garbage that gets put out there with regard. People are trying to find answers as to, oh my gosh, the Dow is down 200 points or 1% or something, not even 1% or whatever it is. They're just trying to, and then to feed some type of thesis. Garbage thesis is what it really should be called, to get you scared to take action. Actually, to be quite honest with you, I am glad that they are out putting that preponderance of evidence, because what's going to happen is they're going to get people so worried that rates are going to rise, are going to sit on the sidelines. And what people are going to do is, you think we've had a run since 2009? As Bachman Turner Overdrive once said, you ain't seen nothing yet. So, yeah. And by the way, the U.S. dollar index, as long as we're out here, the U.S. dollar index, this thing bottomed, as we know. We all know this, right? You and I, we know it. Our king, the king dollar guy, okay, knows that the dollar bottomed back in April 2008. And we saw that first retracement that formed a low back here in April 2011, July 2011. It has been off to the upside ever since. So the U.S. dollar index is moving higher. The Dow is moving higher. Rates are going to be moving higher. We're going to party like it is 1999, only much, much better. So just tell your friend, watch the opening of this show, and then tell me why the markets can't go higher with higher interest rates. Blasphemy. That's all it is. Look great. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. Dow's off 34, S&P down 2. So Larry writes in. Larry C says, hello, Steve. Hello, Larry. Looks like the IWM Inspire attempting to bottom here. Attempting to bottom at the January 2018 highs. I'm considering long position. Please show the daily, weekly, and monthly TAS levels. What story are all of your other tools telling you at this time? So kind of one step at a time here. So let's just take a look at the IWM for Larry so that each of you can see what it is that he's taking a look at. And he's saying go back to the January highs out here. So January highs. Give me a second here. And the January of 2018 high would be right here, January 23rd. So let's just put a line across. Not sure what color's coming up, but you're looking at the color red. 160.63 out there. Let's get rid of a couple of these other lines that are on the chart. Let's just simply go ahead and clear this off. So as Larry is pointing out, he's taking a look at the trading day, IWM, by the way, January 24th. There were 20 million shares that traded when it made its high back in January. Price broke through this level on May 17th. 2018, came back and tested it and rejected it, did that on May 29th, and then it was in essence off to the upside. Now prices pulled back, and yesterday the volume was 21 million, the day before 31, going against 20 million out there. You know, certainly it's pulled back here. Larry, what I would say, so yeah, it looks like it's doing that. Is it trying to bottom or not? Well, one thing that we know about the way that bottoms form, when something is moving lower, it's very likely to continue moving lower until you see some type of bullish reversal candle. Some type of bullish reversal candle. Yesterday's doji was not it. Today's candle is not it. The day before's candle is not it. So if you're asking me, and I don't know what your time frame horizon is that you're trying to take this trade, should you take that trade now? My answer is going to be no. Now, today could be that bullish candle. It could engulf yesterday's body since it's a doji style candle out there, and at least put the odds in your favor that the cavalry has joined you. So that's what I see when I take a look at the IWM chart. If we go take a look at a SPY, and I suppose do the same thing out here, if we look at the SPY and come back to the January high, that's going to be priced out at exactly, well, geez, how about that? Right where my yellow line was at. Let's try to get rid of that. Okay, so that is at a price level of 286. That swing point had 107 million shares, and price pulled back with 105, so lighter volume on the 5th. Yesterday, 87. And it continues to trade above that. Now, I do like the fact that that, as you've identified here, that price has just simply come back to what I consider to be a significant level of a significant price point to reveal information to you. If you go back and study charts, what you'll see, Larry, is that the markets, in order for the markets to have an up year for the most part, you're really looking for them to be able to trade above the prior year's high. Now, you're looking at January 26th. The real number to be looking at would be December 31st or the 29th or whatever it would be of the prior year. And that level out here is actually at about 286.86. So, very likely we're going to see a bullish year inside the S&P 500. More than likely, an extremely bullish year inside the S&P 500. But again, what I would say is that in this case here, you don't have any kind of bullish reversal candle just yet inside of the SPY to give you that signal. Now, Larry, I think you know, as most out there do, is that for me, I long ago got rid of utilizing the ETFs, the index ETFs specifically, to give you and I any kind of guide as to what the markets are doing. I have found them to be absolutely useless. Just useless in providing us information. And the reason is because we're in a day and age where what you and I are trying to do is gather as much information as possible to do some type of pattern recognition trading. Just like the A to B equals CD pattern that I'm going to be teaching tonight, and that comes with a workshop that's got several other patterns that are worthwhile to learn out there. And so it's best for you and I to use the futures contracts. You don't have to trade them, but much better for you and I to use the futures contracts to really reveal what the markets are doing. In that case, we take a look at multiple time frames out there. And also in that case, you're not sitting there being stuck between 9:30 and 4 o'clock to try to make your decision when these are trading, in essence, around the clock. Okay? So if we take a look at the signals out here, we took a look at this yesterday. This is the short-term time frames. And in the short-term time frames, the best bottom signals out here are the 1 hour, the 2 hour, the 5 hour, certainly the 30-minute out here. And we can see you mentioned the Russell 2000. So let's take a look at that. The 5 hour time frame chart, which shows that there's a bottom configuration. That bottom configuration, that's that Stevie Rhodes momentum indicator signal. And this is what it looks like. If we're going to see a bottom here, we also need to see a bullish reversal candle. Now, I've taken most of the bullish candles off of this system at this moment. Let me just redo this here for you so that you can follow along at home. There we go. So I've got all your bullish and bearish candles out here. And let me pull this back. And certainly what we can see out here, Larry, is that it's trying to form a Rhodes momentum indicator signal. The one thing that you're going to see out here that really needs to be accomplished before this gives us the buy, I just want you to be patient, is even though we've got that bottoming formation, and much like you looked at in the IWM, what the equity futures contract says is you can't take that long position until you see it close above 1661. Now, that's assuming that this profile, I don't know how long this profile will last, but one of the things we know is that this is a bearish structured profile. 1661 is the top, 1650.80 is the center, and the bottom is about where we're trading right now, about 16.25. Bearish structured profile. There would be nothing more bullish first than this pattern to complete. Take out resistance. We haven't seen price trade above the top of a 5 hour profile for quite some time, and then you would have a signal of a bottom. So what I'd be watching throughout the day, and I don't know that it's going to happen today. I hope it doesn't happen today. I hope we have just a horrible close. If you're looking for a bullish buy, you want to just see an absolute washout. I don't know if it's going to be today or tomorrow or Thursday or Friday, but that's what you want to see. You'd love to see that. You'd love to see everybody just say, okay, now it's over, because that's when the party probably begins. So, Larry, I'm going to say with regard to Russell 2000, 1661 is your friend. Look for that number out there, and we'll just have to check back with me tomorrow if you would like. Inside the ES Mini, it is also trying to form that bottom configuration. But let me tell you, in its case, 2927 is the number where it's got to get up to. That's a long way away. And before it gets there, it's got to break through your friend and mine, and that is called perigee. And really, you'll know if the market has turned, if the ES Mini closes above 2897.50. And hey, by the way, Larry, in the Russell, it's going to be 1640. I don't recall what the number was that we took a look at there, but 1640 is the price that you need to see it close above inside the Russell 2000 equity futures contract. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So a question coming in from the Tiger's Den from Z. In the Tiger's Den, just simply ask if we take a look at the top 100 U.S. stocks inside of the New York Stock Exchange. So that's the symbol that is up on the screen right now. And the question is, what's the what do the patterns tell you as to where it's going? Now, what I want to do is give you a couple of different outlooks out there. To me, I think it makes it easier for you to understand the bigger picture first. And by the bigger picture, what I have up on my screen right now is a monthly time frame chart. Let me get rid of that bottom panel, by the way. That's volume. We're not going to be able to take a look at that just to enlarge the chart out here. There you go. It's a little bit easier. And, you know, this evening I'm doing a workshop, how to master the A to B equals CD pattern out there. One of my favorite patterns. One of the easiest for you to be able to learn. Now, this is a price projection tool. And that's the whole idea of being able to do your work, take a look at chart patterns out there, get your, you know, I hate to kind of use it, so I won't use it, but really get your thought process, your strategy together, and understanding of what the markets are communicating to you. Now, if you're an individual who believes in the A to B equals CD pattern, and there are many here at TFNN, what I like to do, what I suggest that you always do, is certainly understand what the bigger trend is. And here we're taking a look at a monthly time frame chart for the top 100 U.S. companies. You can see they're trading basically near, in this case, its all-time high, which is from January 2018. And which is at the 11,091 level. We're at 10,820. Yeah, you count the number of points that we're behind. We're basically right there. By the way, markets do not make highs by coming back in significant highs. Let me just state that. Yeah, you can get these double tops and things of that sort. Okay. But they do not make significant highs by coming back and retesting previous highs out there. It's just not the way that it's done. It'll go out and make a newer high, a higher high. It create one of those Rhodes momentum indicator signals patterns out there. But with the New York Stock Exchange the top 100, this is telling us a lot. Now, where's it going? You've got the A to B equals CD pattern out here that says that once that 11,090.51 is taken out, and it will be taken out, then what we're going to see is price make that one-to-one A to B equals CD. That's at 13,380.94 to be exact. If you're asking me, is that where price is going to stop in the long haul? No. At least not as I see it right now. If more information gets revealed that suggests otherwise, then we'll come back and take a look at that. So why is this important? Because if you were trading this, you would want to make sure that you had your head wrapped around what's the bigger picture. Many of us, we get so myopic, so focused on a 30-minute chart or 5-hour chart or even the daily chart, we forget to go back and take a look at what's going on the larger time frame. Now, the other thing you and I can do is get a feel for what are international traders doing when they're taking a look at where they're going to go ahead and invest their money, right? What does the New York Stock Exchange US 100 fund look like in other currencies out here? And basically, earlier in the day, we were at a new all-time high. It's backed off a bit, just simply currency conversions. But we're basically, we made a new all-time high in euros 4 days ago. And we're basically sitting on that level right now. We're backing off a little bit in yen. We're backing off a little bit, haven't broken through a swing point or anything in Great British pound. So it's just kind of the way that the market looks out here. The New York Stock Exchange, remember, it has a bunch of closed-end bond funds in there. Does anybody know how many? I don't know, but several hundred. If we took a look at you want to understand, I don't know, let's just see. Oh, shoot, what's the symbol for the international? Darn it. I had my system kind of did something screwy this morning, and let me see here. I don't know the symbol off the top of my head, but if I can do this, where is it? Right here. What we can do is take a look at what the international equities, the 100 largest international equities are doing inside of the it's all the way back here inside of the New York Stock Exchange. No, it's not EEM. Just give me a moment here, Duffy. But thanks for being a wingman and trying to throw that out there. Give me a second here. Where is it? It's got to be around here somewhere. There we go. So here we can take a look at the international equities. And if you take a look at the international equities, you can see they're nowhere near its highs, right? So when people are taking a look at the New York Stock Exchange and giving it a thrashing, and look, it's a good index to give us some important, useful tools out there. The advanced client oscillator reading getting down below -150. minus 200, 250 are great for oversold and great for bottoms out here. But you can see that it is not the U.S. stocks that are the problem inside the New York Stock Exchange. It is the international market. Just look at the difference. You're trading down here towards, well, you're trading below those February lows, right? So it is not the U.S. That is when you take a look at the Dow 30. It is why the Dow is kind of, hello, a hint as to what market is going to take off and continue zooming to places that people are going to be saying to themselves, how can this be? We're in a period of rising interest rates, and give you like a laundry list of all the reasons why the market shouldn't go up. Don't listen to them. Don't. Anyways, so the U.S. companies, they're doing great. The international companies, top international companies, they're just doing horrible. And they're going to continue to do horrible. The U.S., the dollar's going to keep going high. We already took a look at that during the first segment. The dollar's going to continue moving higher out there. You want to own euros or you want to own dollars right now? And what's that going to be 3 months from now, and 6 months from now, and probably a year from now, and probably 2 years from now? Yeah, that's right. It's going to be all about the king out there. So, Mr. Z, that's what short term. If we go back and take a look, you know what we probably need to see take place out here is a nice solid bottom inside of the New York Stock Exchange. What we're seeing unfold today is we're actually seeing the advanced decline data move higher. This is this center panel of my screen. And see how it's moving slightly higher. But if we take a look what price is doing here, let's just use a little red line out here. We can, and this, I need to see this at the end of the day, and it's probably more than one day. But see how price is moving slightly lower out here? We'll just use a red diagonal arrow, and then we can take this chart here and see that the New York Stock Exchange advanced decline data is moving higher. See, that is what's called a bullish divergence out there. Does it matter? Yeah, it absolutely matters. If you're wondering what made that bottom back in February inside the New York Stock Exchange, that was the pattern. And we can go back because it's what made the highs out here inside the New York Stock Exchange, the most recent highs. You know, now this is the global. This contains the closed-end bond funds, obviously the top 100 for the U.S., the top international stocks, and everything else in between there. So right now at 137, you're asking me what's the message of the New York Stock Exchange, the whole kit and caboodle. It's telling you that it's trying to bottom. But I really wouldn't give you that message at 133 because it won't mean a thing if it ain't got that swing. And it needs to have that swing come 4 o'clock in the afternoon out there. So that's my take on what's going on inside of the markets, and you can't get me to change that. The market, the chart patterns can, but you can't get me to change that. And I want to just make sure, maybe I'm too focused for each of you on the longer term, but I think if we get the longer term piece right, everything else is going to fall right into place. Phil has a question, says, would you get to my question when you get back from this break? So let's go do that.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, look, this evening at between 5 and 6, I'm holding a workshop. I'm inviting you. You're attended. It's easy to, whether you've been a subscriber or not, because we changed the new website, changed to the new website, so everything got reset. And if you've been typically you're only allowed to subscribe to a newsletter once, try it for 30 days, and then your choice is to either join or not to join. Well, if you've been a subscriber in the past, you can try it again. For the next 30 days. So you've got a risk-free trial. You'll see all my new tools, and you're going to get access to this evening's workshop. Whether you can attend live or not doesn't matter because it's archived and is on your members page for the following 30 days. You're going to get access to 4 additional incredible workshops. The 5 reasons traders fail to spot a bear market. That's going to show you the Rhodes Momentum Indicator signal, the exact 5 steps. If there was a pattern in addition to the A to B equals CD pattern that you need to know, that would be it. On top of that, you're going to get access to the information contained in my black box system, how to use that, how to use those tools that are included in the daily newsletter. You're going to see Stevie's red line, how to actually calculate it and use that as a specific tool, as well as my money management workshop. So we're going to go over some Japanese candlestick information, Fibonacci, just how to master that A to B equals CD pattern out there. Speaking of A to B equals CD, Phil here, his question was, could we take a look at Carvana? CVNA is the ticker symbol. And his question is, where do you think Carvana might stop coming back to, or really, where is it going to? It's moving lower, as we can see right now. Looks like trading out at about 48.97. By the way, the tools that are on the system right now, and Phil, today looks like it's going to be a Tom DeMark setup 9 count. Looks like the close is going to be below the close of the bar 4 bars earlier. In the case of Carvana, we have seen in the past where the 9 count has, not always, but has been a place where prices turned. One of the nice things about this is that if tomorrow the low gets taken out, it's telling you about the strong momentum move that is in place out there. So that's the benefit of today's action. Now, though it says that you sold half of your position, planning on holding the rest of it, and so in essence, you're asking, hey, where's this headed to, or where would we come in? And this is a perfect example of really using all of Stevie's tools. Look, we can see that this thing made its top approximately when you sold with that Rhodes momentum indicator signal. That's where that bear sash candle, and that's what we're going to go ahead and use for our A point. That was the swing point we're going to use. It moves down into a hammer candle. Right there, tells you the market's trying to hammer out a bottom. Does that at about 56.87. I don't have the date handy, but we'll go take a look at it. The bounce takes you right up into Stevie's red line. Now it's green, telling us that the price oscillator was above zero. That hammer candle came in on the trading day of September 25th. Of course, we know when you close below the low of a hammer candle, it says, hey, if you're long, you're wrong. Now, what does that mean? That means, hey, go find support. In essence, what Phil is asking. What it looks like to me is going on here, Phil, with regard to Carvana, is this is forming one of those wonderful Gartley buy patterns. We're going to talk about the Gartley buy pattern. You've got the A to B equals CD. The one-to-one level is 48.23. Now, we use these as guidelines, not as exact figures out there. So, and what we also know, or what I know, and looking at this, is it looks to me like this will, even though tomorrow is going to be, or today is going to be a TD setup 9 count, it does look like to me that this has a high probability of becoming more than a one-to-one A to B equals CD to the downside. That doesn't mean it's not going to turn into a Gartley buy pattern. Just means it might not do it at 48.23, but might do it around the 43.95 to even 38.15 level. But we just simply have to take this one step at a time. But this is in the process of forming a Gartley buy pattern. Whether you exit and you try to come back in, you know, a question that you have to decide for you. But it doesn't look like today is the day necessarily for a lower price out there. And if we take a look at Carvana, and it's 3 different time frames, you will see that there is some support out here on a weekly chart, and that's the bottom of its weekly profile. So it gives you another piece of information, at least. This equity has only been around since the middle of 2017, but the bottom of that box is 49.87. We're trading at 49.94. So a close below that on a weekly basis probably gives you one of those extended levels on the daily time frame that we just took a look at for that A to B equals CD to the downside. Not enough information here, Phil, on a monthly chart to provide you and I with anything. But again, Carvana, CVNA, looks like this thing is going to go ahead and form that Gartley buy. And I believe you're a subscriber. So we'll take a look at exactly what you need to do and what you need to know when that Gartley buy pattern goes ahead and completes, because it sounds to me like you actually want to go ahead and get back to a full position. So that was CVNA for Phil. Let's take a look at, see, there's another question maybe that has come in. Is there? There is not. So we are done with all of the questions. Well, Coda wants to take a look at the U.S. dollar index. And even though we talked about the U.S. dollar index before, and we said on a global, larger scale, the U.S. dollar index wants to move higher, what we can do here is look at some shorter-term time frames for Coda. So Coda, we take a look at the U.S. dollar index. Here we've got a 60-minute, we've got a 5-hour daily, and a weekly time frame. Now, what we can see on the weekly time frame out here, if these profiles are correct, there's no reason for us to think that they're not. We're looking at the December contract. Price is trading above the top of its box, 95.08 out here. So it looks like the dollar wants to continue moving higher. If it gets inside, back below 95.08, well, then it opens up a rundown to 94.40 to maybe 93.38. That's using a weekly time frame piece of information. The daily time frame out here, Coda, just formed a brand new profile a couple of days ago, yesterday, as a matter of fact. And what price has been trying to do is get above the top of that box. So you know where there's resistance. That's going to be at 95.55 out there. A close above that says that it's going to go run back to its high. Now, the high that I'm referring to is August 15th, and that's at 96.45. Longer time, longer picture, bigger picture out here, U.S. dollar index is going to head substantially higher, just as the U.S. stock markets. They're going to move substantially higher, too. We're just waiting for that bottom to come in. So, Coda, does that help you out? Is there anything else that you needed with regard to the U.S. dollar index? If there is, just let me know. If not, then we're all set. So we got to figure out what we're going to do with this next minute out here, minute to win it. Let's take a look at gold. Let's go take a look at gold, see what it is doing out here in all the currencies. Now, gold here trading down towards the bottom of its weekly profile. And that is a, let me see here on the weekly profile. We're looking at the left-hand panel chart out here. By the way, the bottom is 1189. The top is 1233. However, the top of the daily is 1214. The consolidation is between the 1189 level to about the 1214. What we've seen take place with gold priced in euros, gold in yen, and I can't say the same about gold in pounds, but the other two currencies, we're seeing a retracement. The question is this going to form a higher low out there? With regard to traders, if you want to know who to blame for why gold can't get moving today, well, mostly it's going to be those Europeans, and mostly going to be the traders sitting at the trading desks in the UK, because they're looking at gold right now and they're saying this is trading below the lows from September 27. They are not buyers. Them be the sellers. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So to close this show out here, one of our dinners wants to take a look at the Green Thumb Industries out here. The ticker symbol is GTBIF. And as I take a look, first of all, I don't know what this is. I'm going to assume that it's some type of growing, maybe a pot company or something out here. Not a lot of data for us to really use to evaluate. But what we can see out here is that it broke a swing point. The swing point, the B point of an A to B equals CD to the downside. That was September 25th. That had 500,000 shares. We've broken with lighter volume. Maybe this is setting up a Tiger Gartley buy pattern out here. But what we can do is we can take a look at the price projection. Progressive doesn't have the only price projection tool. You and I, we've got that price projection tool. That's what we're going to talk about this evening. The 1-to-1 A to B equals CD inside of Green Thumb Industries takes you to 10.05. Now, that really makes a lot of sense to me when we take a look at this chart. Why? Because in essence, that's where the breakaway began on August 29th inside this equity. Breakaway because it gapped to the upside. Gaps are your friends. It's another version of a wide-ranging bar, or can be a wide-ranging bar, and that becomes a support level. So it would look like to me right now, Coda, based on the information being provided to us, you'd be looking to buy this thing around 10.25 to 10.05, to somewhere in that range out there. Now, obviously, what you'd really like if this were to occur is you'd like to see it pull back into that level with less than well, ideally, it'd be less than 250,000 shares, but certainly less than 484 would be pretty good. So I hope that helps you out. And folks, I hope to see you this evening. Just come over to the homepage of TFNN.com. And what you can do is sign up for the Mastering Probabilities newsletter. You get a 30-day free trial. You get access to the A to B equals CD pattern that we'll talk about tonight, and 4 other wonderful workshops. So thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5, and Stevie Son. I'll be back with you from 5 to 6. So have a great Tuesday. We'll look forward to seeing you soon.
Larry Pesavento has just started his